Hey everybody, Smart Silver Stacker here. Hope you're doing well. So there's a major risk of a silver price crash over the course of the next 48 hours. We just got a major red flag from the metals market that the meltdown may have already begun, and silver could be the next metal to fall. We'll take a look at the chart and I will show you why. However, if this event does take place, I suspect that it will be short-lived and it may provide a tremendous opportunity for stackers. So let's get to it. Buy your gold and silver at SD Bullion. Right now, new customers get gold or silver at spot by visiting sdbullion.com/new. All right, so we're going to start the video off with the chart of copper. Now, you might see why. It might be immediately apparent to you why we would start with copper, probably because of this gigantic red candle that formed over the past hour. This is an hourly chart, and the copper price right now is down almost 20% on the day. That's right. As of about 2 hours ago, the copper price was $5.62. Right now, it's $4.57. So copper and silver, they're not the same metals, but they have a lot in common. They're both important industrial metals. So when you see the copper price doing this, yes, silver stackers should definitely pay attention to that. Now, this move occurred following some clarifications regarding tariffs on copper products. The White House just announced that it would impose 50% tariffs on semi-finished products such as copper pipes and wires, but that refined materials such as copper ores and concentrates would be excluded. Now, this had this extremely detrimental effect on the copper price. And a lot of the price action in copper has been driven by tariffs recently. You see this big green candle, which took us up to new record all-time high copper prices. That was on the initial announcement of those tariffs. But I think the takeaway here should be that we live in incredibly volatile, news-driven times where a single headline regarding tariffs, a decision that potentially could be reversed in relatively short order, can cause these huge moves in the markets for the prices of real tangible things like copper, silver, gold, platinum. Platinum, by the way, down almost 7% today. So another sign that there is some significant pressure on the precious metals. Now, part of this sell-off is also driven by news that we got today about U.S. GDP, probably fake numbers anyway, but the data was that the U.S. economy grew at 3% in Q2. It's better than expected, so the implication is that the Fed may be more hesitant to cut rates. So this is putting some pressure on the metals today as well, although that move in copper seems to be pretty much exclusively driven by that announcement. But again, this is just a sign of the times that we live in. Now, let's look at silver, because silver is down today, again, probably driven mostly by that GDP data. We talked about the ominous chart formation that was happening in silver. In fact, we talked about it in this tweet posted on X, or I guess they're not tweets anymore, whatever you call them, just posts on X. I posted this back on Saturday, July 26th, and my caption here, I'll just read it for you. If markets react to the August 1st tariff deadline the way they reacted to April 2nd, silver could get caught up in a pan sell-off event. A return to this trend line could mean silver as low as $30 an ounce. And the way we derive that is we look at the channel that silver has been trading within dating back to 2022. This is the bottom part of the trend line. Right now, we're near the top, and we've got this rising wedge formation in silver. That's a pretty ominous chart formation. It's a bearish formation. Typically, that's how that's interpreted. And then I also mentioned that if such a correction occurs, it would present the buying opportunity of a lifetime. So not financial advice or anything, but if we did see the silver price drop down to this lower trend line around $30, $31, I would be backing up the truck personally on physical silver. You can bet that the sentiment will be very negative at that time if silver does have a correction like that. And I think that would present a tremendous opportunity for stackers or anybody who wants to get long exposure to silver. Now, again, this kind of a move, this significant of a correction is not guaranteed, but you saw what happened in copper today. I mean, if we saw a similar move in silver, it would take us right down to this trend line. And as time has passed since that tweet was published, or again, post, whatever you want to call it, the silver price has broken down from that ascending wedge. So we could be seeing the beginning of a significant sell-off. From a technical standpoint, this is not a good looking chart for silver. Now, long term, I remain incredibly bullish on silver. So don't get it wrong. I know that, the silver's got a lot of things going for it as well. It's got structural deficits in the global silver market. We won't get into that too much in this video, but basically every year for the past several years, the markets have consumed a lot more silver, like 100 million ounces plus, more than what has been produced. So there's less and less silver as time goes by. Also, we have sustained debts and deficits that just continue to grow, right? The debt's out of control, dollar devaluation is likely going to continue in the long term. So I like silver. I would actually welcome a crash. It would be a great opportunity to buy some more silver at lower prices. Now, if we look at the DXY, this is the US dollar index. I do believe the long-term picture for the DXY is not going to be too bright, simply given, how much debt is being created, how much borrowing that eventually is going to have to be monetized by the Fed. But from a short-term technical standpoint, this chart's actually looking pretty good, right? The DXY broke out of this downtrend back here in the middle of July, around July 14th. Since that time, it rallied, it retested that downtrend and then bounced. So from a technical standpoint, the short-term picture is looking very promising for the dollar. And the reason we need to be so cautious regarding silver over the course of the next 48 hours is that tariff deadline, which occurs on Friday, August 1st, right? We don't know exactly how markets are going to react to whatever announcement, whatever trade deals or tariff deals are implemented on that day. But the technicals seem to suggest that it could be very negative for silver. And this sharp decline right here, that was the Liberation Day sell-off. You remember how rapidly that occurred. That sell-off sent us right down to this trend line. So, look what copper did today. It's not unbelievable to think that silver could fall down here to around $30 an ounce. If it does, again, I'll definitely be stacking more. Leave me a comment down below to let me know if you would be stacking more at those prices as well. The gold chart is not looking great here either. I mean, it was in a symmetrical triangle consolidation. We got a false breakout. There was a lot of optimism right here, a lot of euphoria in the metals market. This was right around the time that silver was breaking out to $39 for the first time in 14 years. That turned out to be a false breakdown. We retested the bottom trend line of this consolidation, and then gold has broken down from that level. So we could see a sharper correction in gold as well, which I also think would provide a buying opportunity. Long term, I'm more bullish on silver right now than gold. That largely just has to do with where the gold to silver ratio is still very much above the average. So personally, I'd be stacking silver, but this might provide a good opportunity to get into some gold as well. If you are interested in stacking some gold and we do get a major correction, this is something you might take a look at. The Oklahoma series of goldbacks. This is the new one goldback note that's going to be part of that Oklahoma set. We'll get a look at the rest of these on August 1st. That is when pre-orders begin. So if you want to get yourself a set of the new Oklahoma goldbacks, you'll be able to put an order in for those on August 1st. So if that pre-order coincides with a major pullback in the price of gold, might be a good time to stack those. And then there is one piece of news that kind of throws a little bit of a wrinkle into that whole theory about a correction in the precious metals. This is the fact that Trump has set a new deadline of 10 or 12 days for Russia to act on Ukraine. So again, we do live in a very headline-driven time where headlines can affect markets. And should the U.S. be drawn into a more significant involvement in this conflict with Russia, if NATO and Russia openly come to blows, which I wouldn't rule out at the expiration of this deadline. I mean, we remember what happened with Iran when their deadline expired that Trump had set. This could negate all of the downside from tariffs, and this could simply cause the geopolitical risk premium on gold to explode. So that's why on any pullbacks, I'm going to be stacking, because I think the name of the game moving forward is more debt, it is more deficits, it is more geopolitical instability. But given the technical picture in the metals here, I think that this warrants some significant caution just in the very short term. So leave me a comment down below to let me know what you think. Thanks for watching, everybody. Stay safe and happy stacking, and I'll catch you next time. Smart Silver Stacker out.